in this video, I'm going to show you exactly what happened on AUDUSD from being a 1 to 10 risk reward ratio and end up getting out with about 1 to 5 risk reward ratio. From the forecast to the entry to the trade management and everything else. So make sure you sit to the very end until I show you guys everything on this video. All right, so let's go and let's get started right now. Okay, so let's start from the very beginning, right? So you can see that early in the morning today, we was able to share this forecast right here on AUDUSD. This was before all that happened. So you can see right here that we had a nice rally-based drop supply zone right here, and then we had liquidity which was taken out by this candle right there, and then we saw the market giving us nice confirmation right here by breaking structure, and you can see that the market beautifully dropped with big momentum candle. So what I was anticipating right now was for the market to pull back into this area, and once the market does that, we'll be able to execute this particular trade, right? So our stop loss from here, you can see that our stop loss was 4 pips and our target was 75 pips. All right, so after the forecast was shared, let me show you what ended up happening. So we took the first trade on this particular trade on AUDUSD. You can see that the market actually came to our area. Right here, we were able to enter because of that nice rejection right there. And then as soon after we entered this particular trade, I was taken out by spread because the market came slightly to where my stop loss is. I'm going to show you in a minute. And then we did a re-entry right here. And you can see right here, we're able to re-enter again. As you can see from here, we did a re-entry with the same pip stop loss, 4 pip stop loss and 75 pips target. And then like a few moments later, we saw the market now starting to go in our direction right here. And right now we're up like 3 hours. And then we were able to actually ask the community to actually go break even right here, as you can see from there. And then soon after that, we saw the market dropping even more. And that was amazing. So the market continued to drop, and they just said, guys, let's keep on holding, and then see what ended up happening. The market started to show signs of it reversing. Probably there was some buyers waiting at this level right here. So after noticing that sharp rejection right there, I was able to tell the community to actually put their stop loss right here, to trail their stop loss so that they can actually secure some profit as the market starts to go there. You can see that this is where the market, I told them to trail their stop loss to this level right here. So if you can check this area right here, let's just copy that. So this is this same area right here, as you can see from here, right here. Yeah, it is about 5 hours, and that's how we're taken out with 5 hours. And since then, the market has been going to the upside like that. And right now, people are already out of this trade, and we're able to get out with about 5 hours right here. So this is exactly what happened on AUDUSD. It was really a beautiful trade. I love the way it was moving right here. Before this, the market was actually really promising to actually show like it was going all the way to the take profit. But like I always say, no one knows what's going to happen in the market. So as soon as you have an opportunity to actually make some money, make sure you pay yourself. As Mark Douglas puts it, find a way of paying yourself as long as the market gives you an opportunity to make money. Because no one would have anticipated that this is exactly what's going to happen on this particular trade. No one would have known, right? So that's the reason why you are supposed to find a way of paying yourself as the market makes money available to you, because at any particular time, anything can happen. So let's start from the higher time frame. What was happening on this particular trade? So if you zoom out to from a 4-hour time frame, so you can see that the market has been bearish for a longest time, right? So what I did was I went to the higher time frame and actually first of all figured out where the market is going long term, and then from here I came to this area right here. So from the 2-hour time frame, you are able to see that the market left some structure right here. So you can see that I saw a nice rally-based drop supply zone with liquidity, which was taken out right here. So with a break of structure, that gave me confidence to actually look to enter this particular trade. Other than that, if you drop to the 30 minutes time frame, it's much clearer. There you can see that this was a very sharp rally-based drop supply zone with a break of structure and a nice liquidity right here. It was taken out, and then we waited for the Asian session to be taken out. You can see that the market took out the high of the Asian session and then beautifully came to our area right here. And that's how we were able to actually execute right here. So if you go to the lower time frame, you will see what I was actually explaining to you guys, that the first trade we entered, and then we chunked out, and then we had to re-enter. So guys, it's really important. Like I always say, as long as the market is still giving you an opportunity to enter, make sure you actually execute. So sometimes the market is just going to take you out, and then once it does, and then it just goes back in profit. So this is what ended up happening. We entered on this rejection right here. After that, the market dropped a bit in our direction and then pushed back, and the market just took us out right here. So after seeing the market now starting to push again to the downside, that's why I was about to actually send a re-entry, guys. As long as the market is within your area, it has just taken out maybe because of spread, get back in as long as it's still giving you confirmation to enter. Don't be scared to actually execute. So that's what happened on this particular trade. And then for the order block, let me just show you what I chose as my order block. Let's see what was there. So let's see. So you always have to go to the lower time frame for you to find those order blocks. So you can see right here. So the last bullish candle before the bearish move. So that was the candle right here. I got the high and the low of that particular candle, and the market beautifully came and respected that area and then dropped from there. So that's the power of an order block, guys. And order blocks are very important. You can see this is not just random. The market had to come to this area before moving to the downside. So always make sure you go to the lower time frame and find your order block right there. So this is what ended up happening right here. It was a nice trade, a potential 1 to 19 risk to reward ratio. However, you can see the market dropped over one. Let me just see. So if you move with this to there, I can see that we're up about 1 to 10 risk reward ratio on this particular trade, like 1 to 10. However, the market had its own plans, and we can't argue with the market. So that's what ended up happening, guys. The key takeaway from this video is find a way of paying yourself as the market makes money available to you. Find a way of doing that. It can either be trading a stop loss like I was, or it can be by taking partials. Whatever you're comfortable with, make sure that you do just that. All right. So this end up happening. Another thing I'm really happy with is the way we're able to manage the trade right here, from the re-entry right here to the break-even strategy to the getting out of this particular trade. Everything was spot on. All right, so that's how we do it. Make sure that we update you every step of the way. All right, you guys. So I really hope you found value in this video, guys. If you have, make sure you subscribe, like the video, comment in the comment section, and let me know what you learned from this video, guys. Until next time, goodbye.